It's a great day at Jose Perez and Associates. My name is Jose Perez. This is an update for the month of May 2026. Like always, I put this together so you have a clear, honest picture of what's actually happening in the housing market today. No hype, no doom and gloom, just the facts. This month, we're covering 3 hot topics. Number 1, mortgage rates. Number 2, the importance of pricing your home correctly. And number 3, what's really happening with foreclosures. So let's get into it. Topic 1, mortgage rates. The myth versus the reality. You've probably seen headlines saying rates are too high to buy a home right now. Here's the truth. Mortgage rates are actually at their lowest point in the last 3 spring home buying seasons. And according to Freddie Mac, we're sitting right around 6.5% today. And here's something most people don't realize. If you had bought a home back in January of last year, your mortgage payment on, say, a $400,000 home, that property would have a payment of $2,731 a month. Today, that same loan is about $2,534 a month. It's nearly $200 cheaper every single month in this market. Now, I know some of you are thinking, well, I'm waiting for rates to drop into the 5s. Here's the thing. Experts from Fannie Mae and Mortgage Bankers Association and Wells Fargo, they all agree. Rates are expected to stay in the low to mid 6s for the foreseeable future. So waiting for the 5s would probably save you about $138 a month, and that wait could cost you in home price appreciation in the meantime. So the takeaway, it's not about timing the market, it's about time in the market. Topic 2, pricing your home right. If you're thinking about selling or you know someone who is, this is the most important thing you'll hear this month. Right now, 80% of sellers believe they'll get their asking price or more. That's the expectation, but here's the reality. 62% of homes are actually selling below list price. There's a real disconnect happening. A lot of sellers are still thinking back in 2021 and 2022 when homes were flying off the market with multiple offers over asking price. That market is gone for now. Today, nearly 1 in 5 homes is basically having to do a price reduction before it actually even sells. And here's why that matters so much. The longer a home sits on the market, the bigger the price cut gets. Data from the National Association of Realtors shows that a home listed at $400,000 that sells within the first 2 weeks nets around $380,000. But if that same home sits for over 120 days, it sells for closer to $345,000. It's a $35,000 difference just from overpricing it at the start. The homes that are priced right from day one are selling quickly. Homes that are overpriced are sitting, and buyers notice. When a home lingers, people start to wonder what's wrong with it, even if it's the only issue was just the price. The bottom line, price it right from the start, and you walk away with more money. Topic 3 today, guys, is foreclosures. Now, here's the truth. You're going to start hearing more about rising foreclosures, and yes, they are going up, but before that scares you, I'll give you the full picture. Foreclosure filings are currently around 120,000 per quarter. Sounds like a lot until you compare it to, say, 2008, when there was 9 million distressed transactions. What we're seeing today is not a crisis, it's a return to normal. Here's the most important reason we won't see 2008-style collapse. Homeowners today are sitting on massive equity, especially here in California. The average homeowner has about $295,000 in home equity right now. Nobody walks away from that. Back in 2008, people walked away because they owed more than the home was worth. That's simply just not the case today. So on top of that, homeowners are making their mortgage payments a priority, even when money gets tight. Data shows that people are letting credit cards and car loans go late before they miss a mortgage payment. And when you look at how many homeowners have rates, say in the 3s and 4s locked in, they're going to do whatever it takes to keep that home. So yes, foreclosures are rising, but the foundation of this housing market is strong. Now, let's bring it all home, and here's your 3-point recap for the month of May. Mortgage rates, they are lower than they've been in the last 3 years, especially the last 3 spring home seasons, and they're not moving much from here. So stop waiting and start planning. If you're selling, price right from day one. Don't price high. Don't start high and work your way down. The market will not reward overpricing. A well-priced home sells faster and nets you more money in the end. Foreclosures are rising, but this is not 2008. Homeowners have equity. They have strong mortgage rates and they're prioritizing their payments. The market is on solid ground. So if you want to find out how this impacts you, if you're thinking about buying, selling, take advantage of our free one-on-one consultations. Also, don't forget to like, subscribe, and share this with a friend.